Cheating, lying, malfeasance, and a Ponzi scheme, there are devastating losses in the investing world, embarrassing some of the world's best-known public figures and investment icons. And let's look at this and see how this fits into what's happened all around the investing world this year. I'm Keith Weinhold. This is GRE. Real estate investors that rent property to tenants have a lot to be grateful for. This group, namely, has gratefulness for stable prices and high rental occupancy and higher rents, and more on that in a second. And unlike those real estate investors that rent to tenants, new primary residence owners buying a home to live in, they don't have today's surging rent incomes to offset this year's highest interest rates. Stocks sunk into a bear market this year. Gold and silver fell. Cash? What about holding on to cash? What if you do that? Well, even with a 3% yield, like in a savings account that you can get now, that gets hammered with about 8% inflation. So that's an annual purchasing power loss of 5% for the cash that you hold. Cryptocurrency has had an abhorrently disastrous year, so bad that I should detail it here. We don't talk about it much here on the show, but this is so outrageous with cryptocurrency. Yeah, it was fun while it lasted. Precedented times. Defending crypto at Thanksgiving with the fam just went from a difficult task to a Herculean task. And it's not just that the price of the most popular cryptocurrency, Bitcoin, has free fallen about 75% from last year's high. Well, what's worse than a 75% loss? How about losing it all? Just imagine that you've got your money at your bank, call that Chase or Wells Fargo or whatever. And one day you get a notice from the bank that access to your own money is frozen. You cannot make withdrawals. Your money is locked in the bank. And then the day after that, you learn through the media that your bank gambled away all your money with risky bets. There would have been nothing to withdraw. Well, that's pretty close to what's happened in crypto this year. Okay, major crypto exchanges have failed and declared bankruptcy, taking depositor funds with them. So you can loosely think of a crypto exchange as a crypto bank. Well, when news leaks that a crypto bank made risky investments with depositor funds, those depositors get pretty nervous, and that's happened a lot this year. So then fearful depositors go ahead and make mass withdrawals. That's what's known as a bank run. And these crypto banks, they're over-leveraged, they lack liquidity, so they quickly freeze withdrawals because these banks, they owe more than they have. And essentially, some crypto banks have operated Ponzi schemes where newer investors pay off earlier investors. Last week, the second largest crypto bank, FTX, run by the now disgraced Sam Bankman-Fried, cratered into bankruptcy in exactly this fashion. And the meltdown took SBF's net worth, Sam Bankman-Fried's net worth, from $16 billion down to zero. And previously, he was deemed as some sort of crypto savior, this white knight that offered to swoop in and bail out other crypto banks that had failed earlier this year. Well, Sam Bankman-Fried has been exposed for lying and malfeasance. And notable people like Shark Tank's Kevin O'Leary and quarterback Tom Brady, they had previously endorsed FTX. They invested in it. They got others to invest in it. The NBA's Stephen Curry was involved too. Brady lost tens of millions of dollars, and all kinds of venture capital and investment firms, they lost money, many who were deemed to be the smart money. They were looked at as the smart money. The Miami Heat's arena, the NBA team, that was named FTX Arena. Well, the Heat promptly terminated that agreement. Individual investors like you, and hopefully not you, that held their crypto on these exchanges, they did that because they could generate some yield that way, a little bit of interest. Well, they're likely going to lose most or all of their investment. And unlike your Wells Fargo or your Chase savings account, crypto banks are lightly regulated and they are not FDIC insured. devastating losses. And amidst 2022's failures of crypto banks like FTX and BlockFi and Celsius and Voyager, the contagion is expected to spread. Since 2014, 42% of crypto banks have just vanished without a trace. And if you still hold crypto on an exchange, yes, even Coinbase, you are wise to learn how to move it onto cold storage faster than Twitter users are leaving for Mastodon. The bottom line here is that 2022 is basically the 2008 of crypto. Yeah, 2022 is the 2008 of crypto. Now, to get back to stable and profitable and proven investing, even in 2008's global financial crisis, I did well as a real estate investor renting property to tenants. How could I do that even then? All of my properties were ones that I had bought for cash flow on day one. So 2008 and shortly afterward, though the values of my properties were temporarily suppressed, the rent kept flowing in every month. So how motivated would I really be to sell a property that paid me every single month anyway? Well, not very. Now, fast forward to today, an affordable rental housing could be the best performing asset class both now and for the next 10 years when you look at the demographics and the lack of housing supply. In fact, as you'll see on this chart, it reinforces that America continues to see the largest rent increases in decades. Yeah, these rent increases are pretty staggering, and again, that's due to housing's low supply, and it's the fact that first-time homebuyers, they get priced out with these higher interest rates, and therefore more and more of them need to rent. So for 2 years now, we've seen an increase in rental loss to lease, what's called loss to lease. And what that means is that is the gap between today's market asking rents and the average in-place rent, or that average embedded rent. Now, in-place rent can also be thought of as the contract rent. That's what the CPI tries to measure. And I'll give you an example of this in a moment so that you understand it. As a rule of thumb, the greater your loss to lease, the larger you can make your rent renewal increase. So say that you have an existing tenant paying $1,600 in rent that moved in 6 months ago. All right, well now with market conditions, you find that you can charge $1,700 of rent for a new tenant in a similar unit. Well, therefore, your loss to lease on the existing tenant is $100. Now, this is not a loss for you in the traditional sense. It is an on-paper loss, and it represents the amount of money you're losing by not charging market rent. That's how you can think of loss to lease. So therefore, this often tilts toward you writing shorter leases with your tenants. In fact, at the last Fed meeting, Jerome Powell spoke about rents, stating that there is still some significant rate increases coming, and he went on to say that there will come a point at which rent inflation will start to come down, but that point is well out from where we are now. That's the end of what Jerome Powell said. Now, personally, between what I read and what I see, rent increases occur at a slower rate than they did a few months ago, but rents are still rising faster than historic norms. The best rental properties for buy and hold cash flow, oftentimes they are not in your local area. Instead, they're in investor advantage markets that tend to be in places like the United States, Midwest, and South. For example, Memphis and Jacksonville and Cincinnati. And I have taken years to compile what I like to think is the industry's best list of these property providers at GRE Marketplace. It's free. You can access it too. There's one login, no subscription fee, and you can access all of the nationwide providers. And if you prefer, the income property provider, they manage the property for you too. This is where I still go to buy my own properties myself. And it's easy to make the case that workforce rental housing, that will be the best performing asset class of the next 10 years, and presumably free of Ponzi schemes. So add a durable income stream to your life. This is going to be an asset to you in any market. I'm Keith Weinhold. I'll see you over there at gremarketplace.com.